So today I'm going to be explaining break of structure. After liquidity, this is the second most important confluence that you need to know. So let's get into it. So a break of structure, what it is basically a sign or a confluence that the market is going to reverse. Okay, and break of structure is represented by candles. And what happens is, let me draw it out first. What happens is you're in a trend, right? Let's say you're in a downtrend. At some point, when this trend inevitably turns into an uptrend, because the market can't just downtrend forever, it's impossible for market to just never stop downtrending. At some point, market has to get into an uptrend. Now, what a break of structure is when a high that is formed on a downtrend or an uptrend, or a low that is formed on a downtrend or an uptrend. In this case, it's a high. When a high in a downtrend is closed above by a candle, then that's a break of structure. So what does this look like in terms of candlesticks? Well, I'll draw an example really quick so that you guys can see. All right, so I just drew out this example of a few candlesticks, and I'm going to highlight where the break of structure is. So you can see this is a bearish candle. This is another bearish candle. And so you can see that we're going in a downtrend right here, right? We're making a low right here, and then a high right here, and then a low right here. So this is a downtrend. These first four candles are a downtrend. Now, a break of structure happens when a high in a downtrend is closed above. So in this case of the downtrend, this right here is the high, and I'm going to make it red to mark it out. This high, if we close above it, that means we get a break of structure, and then we're now in an uptrend. So the reason why it's this high and not like this candle or this candle, whatever, is because this is the most recent high in the downtrend. So you can see it's made by this wick. The high includes the wick. The highest point of two candles, if it's an up candle and a down candle, that is the wick. And if there's no wick, then it's just the body, but that's where you put the high. So after we see this, we're waiting for a candle to close above it. So you can see right after we get a bearish candle down, we get a bullish candle up, and we see a huge wick to the upside. But since it did not close above this high, that's not a break of structure. The next candle, we see a huge candle move up, and we see a wick that goes above the high, but this is not a closure above the high. This is a wick. So we still don't have a break of structure at this point. The third candle, however, we have a closure. The body closes above this high. So that means we've broken structure to the upside. And then ideally, what price should do after breaking structure is it should change trends and go into an uptrend. That is ideally what would happen. That is what a break of structure is used for. It's to identify when trends reverse and to help you understand that market is showing signs of a reversal. If you don't have a break of structure ever and price just keeps going down, then you're not looking to take longs on this. You're not looking to take a bullish trade on this because you're still in the downtrend. So why would you trade against the trend? Okay, so I made the drawing of an uptrend, and you guys should pause the video and try to see where the break of structure is on this example, but I'll go over it. Okay, so let's say we've been in an uptrend, right? And this is like the part of the uptrend. These candles are part of an uptrend. Okay, so we have a bunch of blue candles, bullish candles up. We get a candle made down here, and then we get another candle up. So far, we're still in an uptrend, but what do you notice? Well, notice that on this bearish candle and this bullish candle, we made a low. So if we're looking for a break of structure to happen, try to find the break of structure in this example. Okay, so we've been in an uptrend. This is our high. This is our low. This is our high. We're in an uptrend, okay? This low that was made right here is a prominent low because if we close below it, then we get a break of structure to the downside, okay? I'm going to add this wick just to help the example out a little bit. So you can see this low right here is important because we're looking for a candle to close below it. So we get a bearish candle right here that comes, and you can see the low is still untouched on this candle. This candle has not reached this low yet, so there's no break of structure. The second candle is bearish as well, and there's a wick that goes below the low. This is not a break of structure because it's just a wick. The third candle, however, closes below this low. What this means is that we found a break of structure. It's not on this candle that had a wick below the low, but it's on the candle that's body closed past the low. And this candle right here could have a wick like this. It could have any type of wick, but it doesn't matter. As long as the body closes below, that means you have a break of structure to the downside. That means now trend has reversed into a downtrend. So ideally, you would see a downtrend happen after that. All right, so now let's try to find examples of a break of structure on the actual chart. Okay, and I'm going to start with this move down because this is a clear downtrend. Okay, you have a high, a low, a lower high, a lower low. So this is very clearly a downtrend. So let's go and look. If we're in a downtrend on this move, right, what are we looking for if we want to find a break of structure? We're looking for first a high, the high that we're looking at to get closed above. So that's this one right there. This is the high that we want a candle to close above in order to get a break of structure. And you can look and see this candle close above it. So that's a break of structure to the upside. Now we're technically in an uptrend. Okay? And you can see price eventually did reverse and change into an uptrend. Okay, now this is a pretty simple example. Let's try to find another example that makes break of structure a little bit harder to find. Where multiple highs get formed. Let's see. Okay, right here. We're going to be looking for a break of structure to the downside. On this series of candles, you can see we're in an uptrend, right? Let's say you're waiting for price to turn to a downtrend. Here's what you would do, okay? You would mark out a low. There's a low right here. We're waiting for price to close below this low. Okay, and you can see price never closed above this low. It made a new low right here. Whenever a new low is made in an uptrend or any trend, whenever a new high or a new low is made, you disregard the first high that you looked at and you go for the recent high. Now we're looking for this recent low to get closed below. And that happens on this candle, so now we've shifted into a downtrend. And then you can see again, this downtrend turned into an uptrend off of this high getting broken structure above right here. This candle broke structure above this recent high, meaning that now we're in an uptrend. And let's see if we can find a break of structure to the downside now to see whenever this uptrend turns into a downtrend. So we'd be looking for a low, which is right here. This candle right here breaks structure to the downside on that trend. So now it's in a downtrend, and then it goes back to an uptrend. And you can basically see the point of break of structure. It's whenever price closes above or below the recent low in a certain trend or the recent high in a certain trend. So that's pretty much it. If you guys have any questions on break of structure, make sure to ask me in the Discord. This is going to be in the beginner course channel. It's a very important confluence. It's one of the first confluences that you look for the strategy that I use to win trades. So yeah, I'll see y'all in the next video. Let me know if you have any questions on anything, and peace.